When you buy something on credit, is the seller required to include that amount in gross income, meaning that it will be taxable? Let's check this out.
People's Stores is a clothing retailer, and they sold some goods on credit. SARS assessed that certain unpaid installments should be included in People's Store's gross income, which the company opposed. The court needed to decide if these installments should be considered gross income and how they should be valued, face value versus market value. The special court ruled that the installments should be valued at market value, emphasizing that income is recognized when a taxpayer is entitled to it. Principle: the amount is included in gross income when entitled to, not when you receive the money. You must include the face value, not the discounted value, because you are taxed on the earlier of receipt or accrual.
The association organized a race meeting where all proceeds were intended for two charities. The funds were received in the association's bank account, and it later claimed that it did not earn these proceeds on its own behalf, but rather on behalf of the charities. SARS assessed the association for income tax on the proceeds, arguing that since the funds were received by the association, it had an obligation to pay tax on them regardless of its intention to donate the money to charity. The court ruled against the association, stating that although there was a moral obligation to hand over the proceeds to charity, this did not exempt it from tax liability. The key takeaway was that income is recognized at the moment it is received, making it part of the gross income subject to taxation. An amount accrues to a taxpayer if the taxpayer has no legal obligation to pay it over to another person.
Mr. Mooi opposed an assessment by SARS regarding his tax liability, specifically challenging how certain income was treated and whether he was entitled to specific deductions that were disallowed by SARS. The interpretation of accrual for income tax purposes. When is income considered received? Whether certain expenses could be deducted from his taxable income. The court clarified that income is recognized as having accrued when a taxpayer becomes entitled to it, regardless of whether it has been physically received. The ruling emphasized that contingent rights, which depend on certain conditions being fulfilled, do not qualify as gross income until those conditions are met. The court found that Mooi had received payments that constituted taxable income, and thus, he was liable for the taxes assessed by SARS. Principle: if the amount is accrued to you, you are unconditionally entitled to the amount.